SBA EIDL Loan news update, getting up to $26,000 per employee, 0% interest for 6 to 18 months, and up to $150,000 there, and so much more I'm going to be revealing, as well as alternatives up to $2 million, $5 million, incredibly fast. A bit about what they are, how they work, some of the qualifications, and plenty more. My name is Michael with Viral Funding Solutions. I'm a business loan broker expert who's been able to help a lot of businesses get the right type of financing in all sorts of industries I've funded in. And there's not one problem out there that I really haven't seen. I know there's something always that comes up that could be new, but I've been there, done that. I've also received funding myself, so I know the difficulties it takes with getting government funding, let alone getting private lenders, going through a bank, all the troubles that I'm sure you're going through right now or have gone through or perhaps haven't. And you're like, I'm trying to avoid making those mistakes. So what do I have to have ready? And so forth. If you're watching me right now, please give me a hashtag live in the comments or hashtag replay. So I know the time interval. I do see those comments coming in and I'll try to reply back to them accordingly. I know I get extremely busy. That is an understatement. I am flooded. I have plenty of questionnaires to get back to, people emailing me. So I have a bit of time right now from my hectic schedule that I want to make this video for about the next 10 to 15 or so minutes. I'm going to try to do that. I know some of my videos have gone beyond that if you've watched me in the past. Now, let me know too, where are you tuning in from? How are things going? How's your day? What do you have going on? Where are you watching from? Are you at home now? Do you have the day off? Are you on your lunch break somewhere and you just saw something come up on live and thought you'd tune in? So on EIDL, we came out with content on this recently, and what I'm hearing from the SBA and the whole no outstanding applications, that still stands. So for any new borrowers, any ongoing borrowers for another application, that'll be most difficult to do in requesting those increases. So that's not available. The increase is a reconsideration at this phase. And then the Capital Access Financial System, going through your CAFS portal and making sure you understand what balances, what payments, when they're due. That for a lot of people are ongoing right now, and there will be plenty of more. So making sure you make those payments on time is most important. I know people want forgiveness. Let's get another deferment. Let's do this. Let's do that. But that isn't realistic. And I get a lot of business owners right now are struggling, and I can name all the types of industries, like in the beauty space, salon, those are dealing with a lot. You have the restaurant owners. Automotive is huge right now. And on top of that, transportation with trucking, wow, it is off the roof how difficult it is right now to deal with making payments, and let alone all the fuel costs, supply chain issues, shortages, higher demands, less of a supply. Welcome in, Don. How are you doing? I'll go into your question here in just a second, but for those of you in here, just know that I'm going to be getting onto the share screen in a moment and going through some of the alternatives, the up to $26,000 per employee that you don't have to pay back at all. You get this, you keep it, don't give it back. And I'm going to show you what the contingencies are there and some of the alternatives. But back on EIDL, the whole increase, outstanding applications, whatever is due now, make sure you're taking care of that. Do not neglect that. Now, if you're an individual who's caused some kind of scam, I could see where that'd be most difficult. And don't think that it won't be looked at, because they have their officers out there. They have people looking at this over a 10-year plus time frame. They're going to be doing their investigations on similar stuff like the PPP loan. And they have a team that they've enforced to look over all of this. And I don't want to get into all the stories in this video, but just make sure you have your payments structure ready. Everything's going and it's being sent out. You should have received a reminder of your payments, of such as like a notification that, hey, it's time to make these, not as in here's your statement, but that's where you'll want to return to your portal to look for more of it. Appreciate it, Don. Bobby, welcome in. How are you doing? I'll get to your question in a moment. Like I said, I want to be respectful to Don as well. I want to answer his first. But I'll be jumping into the share screen in a moment, and all this information for you guys, it's going to be down below. So as I go along with about the 26,000 per employee, as well as the alternative of the 5 million, I'm going to be drawing some examples here about how to reverse engineer from top to bottom, where you should start off with, or where you are currently, where to move into if this situation doesn't work, and what I'm needing from you. And there's so much. So make sure you have the documentation ready. Like when I show you something, have it ready the way that I list it. Because a lot of business owners, especially with heavier documentation, like other SBA loans, they don't have everything. There's people that are trying to get term loans that don't have all the documentation. And so I say it a lot of the times in the beginning. And if you're not going to supply this, let's not even get started. So let me come over here to the comments really quickly, and then I'll transfer over to the screen. Not at this moment. Like I said again, and that'll be difficult for the years that they're looking at from back then. I mean, not also the most recent, but like I said, it's not something that they're going to be dispersing funds to people right now. I know there's a different side of that program for what happened in Florida, and there's a different economic relief program going on there with housing and restructuring. So that's a bit of a different situation. And that's one you can file for separately. But as opposed to what's happening right now with an overall look at EIDL, like I said again in the beginning of this, that's something that you'll have to wait on and see what happens in the next year if anything were to change. Bobby, you named transportation. So what do you do to stay, or do you mean say or stay? Stay in business? That's a very good question. And it's not a one answer fits all. And here's why I say it, because you are structurally built different than somebody else's business. You have to understand how much money are you allocating? What are your resources? Are you not saving enough, spending more? You have more overhead. Why is that? How much have you taken on? What kind of truck do you have? How much did you pay? Do you have a lease, EFA? You have to own it. There's so many situations that I just can't say. But ultimately, what I do with business owners when I look at their financials, if I'm asking for higher documentation, I reverse engineer and I look at their profitability year over year. I look at their profit. I look at their margins. I do my calculations. I do averages. And I'll say, well, you have a lot of overhead here. There's a lot of expenses. And I'll see why that is. And then I'll look at the revenue as well. And I'll make a determination of what can we do better? What can we eliminate, reduce, at least reduce? Or you have multiple trucks just sitting in your garage. Why are they just sitting there collecting dust? Nobody's operating them. You can't hire the right employees to operate them. And you can't allow yourself to spend that kind of money. So what do? You might have to sell something to get extra cash flow into your business. And that cash flow can then be used for fuel costs. And you think about the long-term effect of that and how many vehicles you have. And so it's a lot more than what I'm saying. And I can speak to you about that. It's a per basis type of situation. And it goes the same for every other industry. Understand what you have to cut costs on. What do you have to invest more energy and time into? Because there's probably that one product or service that's giving you the best ROI. Why don't you continue to move into that? Have you exhausted it? Now you have another service. Don't move from service to service if you have not yet focused on that one. That's going to be the primary driver of your revenue. And learning how to have long-term values of your customers, the return on that investment over time, not just a one-time transaction. You have contracts, bids. You understand this. The more you have, the better. And what are you doing with that relationship? And there's a lot more. So now let me jump into the share screen and go into, I think I'll start off with, let me do this. I'm going to go to my Sketchpad. I had another document open. One second. So why I have this Sketchpad in front of you? I did this so I can show you the process of what a lot of people will end up going through and what they're missing out on. So this is non-EIDL related. There are other alternatives, as I mentioned very quickly, that I'll leave you to down below in the description, like the SBA 7A loan. We'll kind of touch upon it here, but I have separate video content on that SBA 7A loan if you are applicable and if it qualifies for you. Everybody is different. So that SBA 7A loan, there are other alternatives out there, up to 2 million, 5 million with lower documentation, up to 26,000 per employee. I'm going to be sharing with you, but I will be releasing a video that I did not too long ago. And this is the reality, that if you do not have business credit established, but yet you have everything else, you're missing just that one thing. That alone can disqualify you, on top of perhaps other reasons, for SBA loans, unsecured term loans, lines of credit, because you have nothing that'll report. It can't report. What are we reporting to? And when we look at your reports, it's very thin. There's no history there that shows us what you're building underneath your business. So I'll leave my free business credit building video series down below. Anything personal credit related to, I'll have more information on, you can check out. But I would jump on top of that. A lot of people are neglecting it. They say one thing, they do another. I get busy, I'm not doing that. I get it, but you're too busy in making excuses at the end of the day. Am I right or wrong? Who are we looking at the mirror, and what's our reflection? That's the person that we need to change. That's the person that we need to ask ourselves, are we doing the best to our ability to maximize our borrowing power, whether it is initially or it is not? So over here, let me put kind of like a stepway here. And at the very top, you perhaps see me do something similar to this. Most people up here are looking for those SBA 7A loans. They want the EIDL loans. Hey, if we can go to 1% interest rates, I'll be very happy to do that. Of course we will. It'll help us. And so up here, we have the SBA 7A program, which is an alternative to the EIDL. It's not exactly the same thing. And I'll leave more content to that down below in the description. It is another government program. You have to meet the qualifications, but do you have the documentation? If you do not put the energy and time into it, especially on my side, because in the lenders and the underwriters, because they will keep asking me, hounding me, Michael, where is Jeremy? Where's Sally? Like, are they serious about this? Are they not? Oh, they just missed out on a piece of documentation. Well, why didn't they know that before? I did tell them that before. They just don't listen. Or they just choose to do what they want to do. Or they just don't know how to read something. And that's what it takes. A phone call is one thing, but if it's on paper, it's on an email, please take the time to read it. And when I ask for feedback, I can see when certain people open up emails. I can see when people are ignoring. And that's not a good sign at all. You don't want to have that relationship with me. I'm never pressuring somebody. I never do that. Never, ever do I pressure somebody. I haven't never done that actually in this and in other industries. And so if you don't like something, step up to the plate and talk about it. Don't just ignore it like it's going to just solve itself, that if you go and find another solution, it'll get better. I'm an expert at what I do. Personal loans, startup loans, business loans, unsecured term loans, lines of credit. I'll even tell you beforehand, keep an open mind about it. I'm not saying you will get approved. There's a slight chance with your credit being as high as it is, your revenue being where it is, but the industry, you're not having the business credit. Boom, but it doesn't hurt because we can do a soft pull on this. And if it's in-house, even better. So think about these things before you get frustrated. I can hear it in people's voices. I can see it without you even saying a word. And I don't deal with that energy and time. Don't bring that to me. I have other businesses that I have to run as well on top of what you are doing. So keep yourself mindful and let's make this less friction, no friction, less resistance. Let's not do that. Let's not play that game where you're going to be hiding and playing the hide and go seek game. We don't do that here. We're adults. So let's come back to this. Up here, we have the SBA 7A. Now, there are certain qualifications. One of those I just mentioned earlier, which is you want to have business credit established. You want to have personal and business credit up there, and you want to make sure you have reporting trading lines. 3 to 5 plus is best. Make sure you have that payday score. Good. FICO SBSS scores of 155 or greater, sometimes less, even dependent on express loans, which are up to 350K. Without going too much into the details, again, the video will be down below in the description. You should use this usually for primarily growth and expansion. Now, you can use it for expenses, refinancing, consolidating, other types of loans if you have them, and what remaining balances are on those, whether they're cash advances, lines of credit, business term loans, etc. What do you have remaining? What other liens do you have? Anything? Do you have any bankruptcies, foreclosures, liens, late payments? What are those? And I won't get into the description of those, but just know that's available and you can get up to 5 million. You have the 504 program as well for real estate, commercial real estate. You also have SBA 7A, which I'm doing a lot of commercial real estate deals. On top of that, well, now I'm on the topic of commercial real estate. You have traditional commercial property mortgages with private lenders in the traditional real estate financing world, which I have the best of the best in this industry by far. And that's another alternative if that looks attractive. If you can't qualify for the SBA 7A up to 90% or so financing, 100%, it's much more difficult to, but there are alternatives. And what we are trying to accomplish, it may make more sense for you to do option 2 over here or option 1, however you see it. Now, you have other SBA programs. You have the SBA Microloan. You have the SBA Community Advantage, an AA mentoring program, and quite a few more other ones underneath the SBA 7A and so forth. So understand what those are. I'll leave more content to the SBA, government financing, other EIDL loan updates if necessary, and so forth. Now, underneath here, by no means is it less. So don't think of this as being, oh my, if I don't get an SBA loan, I'm going to look at this and go, well, I don't want it because of the rates. I don't want it because I'm looking at, I got to pay back $50,000 on getting $20,000. Let's say I'm paying back $27,000 on $20,000 over 8 months or whatever it is. Well, who are we kidding? Like, yeah, that's not supposed to be inexpensive. The point of it is your benefit has to exceed your repayment. So whatever you see here from now on out, even the SBA 7A loan, your benefit has to exceed your repayment. I don't want to get into a conversation with someone, especially if you know this. If you don't know it, I get it. I understand. I'm okay with it. I don't ever get frustrated or impatient. But what I want you to understand is that I'm doing things for your best interest. If you are going to hurt your cash flow by taking $20,000, you pay back $27,000, who in the heck would want to say, yes, go with the money? And I break it down for you on a monthly, on a biweekly, weekly, daily schedule. What does it look like? What type of schedule do you have? I'll get into that in a moment. But SBA 7A loans are up there. Over here, you have secured loans. We put SL for secured loans. And right there, what you're dealing with are the ones where you can offer up collateral, assets, accounts receivables. You have more control if you give up invoices. I'll put IV for invoices. If you're able to give to a factoring company, like you have $800,000 in aging receivables and overall unpaid invoices, well, you only want to offer up $500,000 to get $500,000 initially to start with. That's what you say, okay, I want that. Now, I'm going to give up equivalent to that amount, and the amount that you get financing for is a bit different, up to 85, 90% in cases and so forth. So you say, I want ultimate power over what I can give up. I'm going to use unpaid invoices with this factoring company that Michael knows that's the best for me. And I have multiple lenders in this industry who work best for transportation, ones for work for other industries that are better, and technology. There's a lot more that goes with this. So you just have to understand the right lender, and I'm going to pair you up with the best one regardless. And we'll show you, and you won't have questions asked, but you have control, totality over what you give up. And you can bridge cash flow gaps. You can use this for working capital, whatever you decide to use. But you know that you used an asset that was very favorable. And in this market, the appreciation, depreciation of that, and the value there that a lender wants to see, and there's no credit score check in the beginning of all of this, like it's going for the customer that's invoiced, that you're invoicing, that the factoring company is dealing with, like it's a win-win. You can bypass those type of things with bank statements and so forth. So if you have assets, real estate, equipment, stocks and bonds, mutual funds, inventory, whatever that may be that we can take and say, hey, we have equity invested into this, how much equity, what properties, is it high commercial property, mortgage property? What are we looking at here? What's the situation? Is it enough inventory where it's not too niche and the lender does not want to take that risk? They don't know what they're doing with this. It's too hard to in this market. So there's a lot of components. So we have the secured financing, and I have content on that. I'll leave you guys to down below in the description. Now, if you're getting value from this content, guys, I don't say this enough. I don't want to be that person, but if you are getting value, please share it with others who you feel will get value out of it. It can be a complete stranger, a friend, or a family member. It doesn't have to be somebody you know, but you know this. At the end of the day, you can rest your head on your pillow very safely, securely, subconsciously, and consciously feel better when you go through your sleep, REM, you wake up in the morning, and you're so refreshed. You know how your day's going, but more importantly, you know that you made an impact to someone else out there, whether you know them or not. It's like you gave away one of your organs to them, a kidney to someone, and you're saying, hey, here is this information for you. This Michael guy showed me that this needs an education because he has processes. The way he does things are very punctual and disciplined, and I have my ways of doing them, and I'm going to get the best for you. But if you are that person who's just I don't want this. And you're going to go do things on your own. Go do it. By all means, go. I'm not stopping you, but I'm telling you that if you do that, that can lead into a scam. That can lead into more third parties getting your information. If they don't have it already, more of them. Email, text, email. I just had to select something. I hear it all the time. Michael, I saw what you were trying to do, but I just had to, I would have gone with you, but I just got to select something, and this company said they were going to do that, but I said I was going to help you even better. You just didn't take the time to view what I sent you, if I did send you it. Or you just wanted to hear what you only wanted to hear because it sounds best for you. I get that. It sounds best for you. That's what you want. That's my best interest to help you. First of all, as a person, who are you? Secondly, who are you in business? I remember people for who they are as well, more so than what their business is. Because you can say that about someone when you go, hey, who's John? Oh, John, I remember John. He was over there picking up a breakfast at Sherry's. He was over there at Denny's, and he was okay with giving me a call or me giving him a call or how we ever communicated. I do remember your business very well. You see that with people. Like, how do you remember me? And I have content out on the web on that, so I won't speak too much about my story right now. I may release it in time. It's a part of the Business Funding Mastery Academy course. So down below, if I haven't said this, I have an A to Z Business Funding Mastery Academy course that I have open for free. This I can be charging literally thousands upon thousands of dollars for, literally over $2,000. And what it does is it'll show you step by step who you need to become for the person to then becomes the person in their business, who then becomes that person in their business who's operating financially well, and what you need to know about the different products and services, more so on the business front. And also, the questionnaire form will be down below in the description in time. Right now, I didn't put a description on the live, but on the replay, you'll see it. And there will be a questionnaire form. Fill that out, and I'll give you a very personalized and customized email response on your best funding option and options. I'll take care of you. I'll go through certain examples. I'll go through things that you may have not seen, why this has happened, what is this product, how does that work, how can you break it down for me? So many scenarios, but fill that out. Let me see concrete details, and I'll give you a response back via email. I got quite a bit of those to work today. Tonight I might be working on it. I'll be quite busy. I have family coming over from California, so I'll be happy for that. And I will try to fill in about 8 to 9 or so tonight to fill out some emails, do some questionnaires. I got you. I'm taking care of you. I got you. Nobody else does things the way that I do them as effectively. And I don't say this as a cocky way. I'm not a cocky person. I say this, I'm very confident in what I do. And I know what's happening in underwriting. I know all of this. I have a team. Sometimes it's just me. Sometimes I need a team to monitor things while I'm doing a few other things, but I know what's happening. I'm getting feedback from my lenders, my underwriters. It's all there. It's just up to you to make that right informed decision. So back to this, we have different forms of financing, as I said, with secured financing. We have the hard real estate, whatever you're supplying that makes sense. Now, underneath this, again, by no means, we take one step down. Look at Mario climbing up the ladder. Oh, he's going backwards. And over here, we have US, not for like USA, but unsecured financing, USF, University of San Francisco. No. Well, unsecured financing here just simply means you do not have to offer up collateral for financing. So NC for no collateral, kind of like NA as in not applicable. So no collateral, meaning you do not have to give up anything. It's based more upon your revenue. So let me move this over and go into the revenue part. We'll close up shop here. I know we're past time. I want to try to get out of here as soon as possible. I know you guys are busy, and I am too. But unsecured financing is where you do not have to, again, I'll say it one more time, put up collateral. However, this is where a lot of you fall into, and I've been speaking to you a lot of the time. If you've known me for some time, this sounds familiar to you. You go, yeah, that's where I am. Hey, this is me right here. This is my classroom. And then you can build into real estate stuff, and then you can start getting more assets over time if that's what you want to do, if you don't have it already. But just think about walking into that first day into your classroom. You're like, where's room number 5? Okay, I kind of want to go into this one, but yeah, let's go to here. And then you have to start there. And then in the next grade, you move your way up. And so think about it in this format in a sense, but also these types of products, they're based primarily off of revenue. So revenue-based financing, what are they doing? They're looking at everything. Certain ones will just look at credit card receipts and what you're having in other parts of revenue, but there are others that encompass the whole revenue. So cash, HGH, wire, electronic, what transfers, how are those being transferred? You have a lot more than that. Credit card receipts. Is your company taking credit card receipts? Do we have to look at those? Are you moving money from Square over to your business account? From business to business is what we want to see. But be very careful about a lot of this and make sure you have that one account primarily that you're depositing into, the one that you're going to go into and apply with and say, hey, we looked at this account. This is true revenue. The transfers, how do we transfer? How is it being transferred? From what account to what account? Is it verifiable? Can we track this easily? Okay, we can't. So that can't not be stated as true revenue. It looks like you're manipulating bank statements, even though you think you're not, which you don't. But to a lender, that's what it looks like. And we can look at this stuff later. I already created content on those kind of depositing down below. And I also have it, I believe it's in the course. Yeah, should be in there. So make sure you check that out. But you have at one of the top points, you have an unsecured term loan. That meaning you can get a lump sum. Simple, a lump sum. You have a line of credit, a revolving line. So almost like a credit line hybrid, or I'll get into in a moment, where you have business credit cards that are revolving accounts. You can withdraw, liquidate, use that cash for different investments. Go use it for real estate property, whatever you choose to use for. That's your own obligation and your own power. How you decide to factor in taking in and out the money, that's the whole purpose of what you are doing as a business owner. And that's something that we can discuss about how you decide you want to use your funds, and I can help you maximize your potential. So you have a line of credit revolving. You can take, let's say, for example, you get 100,000, then you only want to withdraw 50,000 for a season or for something you need really big right now. Like, I'll only take 50,000 now. So this is what my remittance schedule would look like. This is what my balance fee, my withdrawal fee would look like. This would be what the principal and the interest would be. How would it look like on a daily, weekly, bi-weekly, on a monthly basis? Excuse me. I can do pre-ballpark numbers. I always pre-underwrite files before they go into underwriting. I can show you how more or less this will work in your situation. And then once we have everything situated, like the offer, then I can say, hey, this will be like this then. This is no different than what I kind of more or less showed you, but this is some different numbers, kind of in the similar ballpark range, more or less. And then you go through this, boom, 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 boom. You only want to withdraw 10,000. Well, my interest rates, Michael, they're telling me I got to pay back $200 a week. And no, it's not about the interest rates. And that's really low. You're paying only $200 a week. Oh my goodness. How many people would be dying right now to have what you have? So be considerate of that it's not about the rates. I'm fixated on APRs. I'm fixated on AIRs. I do all the numbers. I do that every day. Excel, I do it by hand. I do it in a lot of different ways. Formulas that you guys don't even want to wrap your head around. But because I love mathematics, sciences, the systems, how my brain works, I can do a lot of this. But if you're worried, like, oh, well, I don't have, what? I got to pay back how much? Okay, well, the repayment obviously is higher than the benefit. But the advantage you have with getting a line of credit is you can use and withdraw from whenever you need to and pay it off as fast as possible. So if you had 52 weeks, you had about a year to pay it off. Why would I want to keep it for 52 weeks when I can pay it off within the first 2 weeks? Does that make any sense to you? So you keep your payments low instead of getting a $200, a $500 a week. Okay, $1,000. Oh my God, it's adding up. 2,000, 3,000. Then you're like, I want to pull more money out of my 100,000 originally. Now I pulled out an extra 20,000. I'm now at 70,000 of the full 100K. Can't exceed that. Oh, well, now what happens is that the interest reshapes itself. Now you maybe have a $100 a week payment or whatever it is. Now you're paying $600 for the total of it because it readjusts and amortizes. So now you're paying $1,200. You're paying over $3,200 plus per month. Okay, well, I can see why you might be thinking that's higher because you're not understanding how to use your funds. You're in a position right now where you're just like, I want money. Yeah, you should have money, not scramble for it. But how idiotic would it be if you just received funding but didn't know how to apply it? In what world does that make sense? I just wanted to have money to just sit there. Look at the EIDL loan. People were using that money effectively, and then other times they're like, yeah, I just had the money to sit there. I didn't want to go apply for other loans because I just know I could use this money. But how you choose the money, how you restrict it to use that money is another question. And so if you're neglecting all this and thinking, well, I'm better than this. Yeah, you will be. If you use what you have now, you can actually raise your revenue. You can work on your personal credit. How about you work on establishing business credit at the same time? Well, okay, just send me the information. I'll look at it. 1 week, 2 weeks later, 3 weeks later, SpongeBob SquarePants here. You're in Bikini Bottom still. And you're wondering why you haven't done anything. Because you haven't listened. You only wanted to listen to yourself. Your ego got in the way. So back to this. And this in no ways is me being negative or aggressive. If you took it that way, I mean, this may be your first time watching, but for those of you who have watched me before, this is just some tough love. If you cannot take that tough love and run with it, and I'm the oldest of two. I got a younger brother, and I'm very specific. Sometimes I'm not as straightforward, but other times I am, and I want to make sure you guys understand this, that it has to make sense. And then underneath here, let's just say this. You have a merchant cash advance. I haven't gone there yet. So let's touch upon the merchant cash advance. And these are things that I can work with you on and understand what the payability would be like and so forth. But like I give people examples on how much you can get approved for a merchant cash advance. That's based on future receivables. I won't spend too much time on this. Content down below for it. These are on factor rates. That's how it's amortized. It's not really an amortization in terms of a loan, principal and interest, but it's these factor rates are a total payback between a 1.1, sometimes 1.15, 1.19 is what you see, 1.19 to 1.5 or 1.19 to 1.7. APRs can exceed, and they can be up there above 100 to 350%. Yeah, they could be high because this by no means is inexpensive money, but it again comes back to the same principle. What is the benefit? How are you using this money? I'm using it for inventory. How much do you need? What would realistically a good monthly payment look like if you're not even on a monthly repayment? You're only on a daily or weekly. What would be an acceptable monthly repayment for you? Then I work backwards and I go, that would be fitting. Although I can't help you get a monthly repayment right now because you're not situated, you're over leveraged too. If we had you start off at this amount, then this would lead into this. Now, hear me out. So the merchant cash advance, those are the factor rates. Those are the total paybacks between 1.19 regularly to 1.7. Depends on your risk association, your revenue, etc. And for example, you normally get approved between 10 to 15% of your annual gross sales. So I can do things on here, but I want to just bring this out because I'm going to do a few extra numbers on my end. So if I had my calculator and let's say you were generating, that's an easy number to do. So let's just do this and I'll have more numbers. So at a minimum of $1 million, you'll be getting at a 100,000. Okay. So then we can take that same number and say, this is an easy one, but you'll get up to 150,000 at max for most cases. And if we break it down revenue wise, if you're generating, what are you doing now? Like, yeah, you can tell me you're doing $1 million a month, but I want to break it down. We have to look at what you're doing month to month. We'll look for the last 3 months. We'll look at the last 3 to 6 months, depending on the history and the service and the lender. Not jumping into all that right now, but you're looking at, let's say you're doing, okay, you're doing maybe at a minimum of 100,000. Recently you had 100,000 month 3 months ago. And in the middle month you had 120,000. And then you drop back down to 105 or 100,000. Although that's not a huge amount, 15 to 20, we're kind of staying within that range. That's still significant because you're fluctuating. You're going from 100 to 120 or then to that 105, 100,000. You kind of had a lower month just recently. So if you're doing this, you're going here, you're going there, and then recently, boom, or whatever way it looks like, that's harder. And we're going to end up getting you somewhere between, at that amount, we average them. And we look at more, we look at your lowest month, and we can make an evaluation on your lowest month out of the last 3 months, your average monthly sales within the last 6 months, and we see where you are at your highest point, where you are at your lowest point. What are you doing most recently? So if you're frustrated, I didn't want to get it. No, stop. You're not looking at all the alternatives. And I'm going to jump into that in a moment, how you can start stacking different products. So let me come back into this. And yeah, it won't be necessarily cheap. You're going to be paying 100,000. You're going to be paying 159,000 at that risk, or 149,000 over 12 months, 15 months, maybe 8 months if you don't have a good credit score. So what do? Back to this very quickly. Apologize for that. So what you end up having to do is say, what is my negotiation power in this? My lender is saying, I'm going to get approved for this amount. Well, do I have other offers? Yeah, we can generally show you more offers. We say, hey, we give you one offer for 110,000 because of what you're doing. We can't give you more than 120% because you're fluctuating here. And this is what your revenue is what we project you to be at as well. So we say, hey, we'll start you off with 110,000. Your credit, where was it? But I was at a credit of a 600. Okay, that's terrible. That's not exactly terrible, but it's bad. It's down there. And you're doing this with credit? Like, how do we give you 12 to 24 months when you have a 600 credit score? I've made content on this, and it's in the course. So make sure you guys go to the course, get that questionnaire done, completed. I'll give you a free 6-step pre-approval lending checklist on top of it. But how are we going to give you 12 to 24 months when you're at a low 600? You want to have at least a year's plus, if not 2+ years worth, having the high 675s. You're already revenue-wise over 50,000. You can get into the 12 to 24 months, but the rates are still going to be high or whatever you're at. I'll show you the underwriting and how this all works for different services. So you're not questioning, why did I get 8 months? Why did I get 12 months? Why did I get 50? How do I get to 18 months? I wanted 3 to 12 years. How do I get that? So that goes back to my point. You have multiple offers. Start somewhere. Grow into it. I only want to you have an offer of 80,000. You had 4 offers. We gave you one at the highest of 110. We gave you one for 90, 80, 50, maybe 40, whatever you want to start off with. We go, okay, yeah, you have that negotiation power. Others will not. And you'll say, okay, yeah, let me start off with 50,000, Michael. And then because I didn't want to have to repay back 159,000 or whatever I'm getting, whatever that amount is. And you're looking at those from those numbers. Okay, well, let's start off with less. You'll pay back maybe at 50,000, 75, 60,000, whatever it is there. Over what time you have in the term, we can't extend that. So we'll end up still giving you the 8 months, whatever you qualified for. The interest rates are already high enough for you. Okay, I don't need it all at once. Let me start with a little bit. Let me see how I can work this in. I'll come back. I'll even pay it off early. I'm going to pay it off in about a month or 2. No worries. I'm going to come back. I'll get more funding. Good. Now, it's a question of, will you come back and get more funding? A lot of people do. Now, how do people move from one service to the other? You build your business credit. You get your personal credit up. You get your business credit profile. You get your time in business where it needs to be if it isn't already. You get the right type of financials. I can't tell you enough how many times people come to me and go, I want a term loan. And then I go through what are the documentations needed? What do I need for a pre-approval? And then I'll go with you and I'll talk to you about what I need after that. Or here's everything I need up front. Oh, no. Okay, are you open for lower documentation funding with just 3 months of bank statements or 3 to 6? Avoided check, copy your driver's license. Where are they now? Where are you peeling off to? If somebody's working with me the way that they're working with me like this, oh, hell, I'd be reaching back to them every second. I have a person right now. I have a lot, but one person right now who's on top of seeing my emails, who just responds right away. Like, I get we don't always do that because we're busy. We have to think things through. Oh, but 1 week, 2 weeks, 3 weeks. Who are we kidding? Don't be a joke. Show up. Be legitimate. Because I'm looking at you, and that's a character flaw. Your character is just horrendous if you're doing that. Because you're not accountable, you're not responsible. You're not disciplined, you're not punctual. I'm not saying you have to be like me. What I'm saying is, where is your character? Have you worked on yourself as a business owner first? Like, have you worked on your personal traits? Have you worked on your mindset? You probably haven't. You probably just got into a business. Your family gave you a business, or you went to go out there and buy a business and thought it would be so simple. And then you could go get financing and you're scrambling. But those of you who speak with me, whether you wanted financing now or not, I mean, I know who's using energy and time efficiently and who's not, who's just out there looking for information and says they're going to do something, don't do it. That's why I don't take phone calls all the time. Think I'm dumb? I'm not. I don't do that because of those reasons and more. So back to this topic at hand. So you have those merchant cash advances, unsecured term loans, the lines of credit. There are quite a bit more. You can do a personal loan. So I'm going to actually add that right here. So we can add a personal/startup loan. And by no means am I saying that Mario is digressing by going backwards down the ladder here. And so personal/startup loans. Now, what these enable you to do is take it underneath your personal name. Now, if you don't have extra leverage, if I'm telling you over here, you do not have business credit established, you do not have the bank statements for your business at an aptitude where they need to be. You do not have the financials in terms of business tax returns. And sometimes we will ask for that in some cases for certain lenders from a personal loan. So by that, you should have this already situated. If I come to you and I asked you, can you supply this documentation? I want this loan. Yeah, I want to do this. Here's what I'll need from you. Yeah, I do have it. Yeah, let's try it out. And then we come to find out that, hey, I actually didn't have this. I needed this done. I'll get it back to you in a month. Okay, we can revisit this in a month. Well, one of your recent tax returns due? I'll let you know. No, we actually need to see what's happening with this one. It's okay. But do not come into this energy and time wasting. I am not for that. Nobody ever should be put in that situation. Now back to this. You have the personal/startup loans that you can use for business. Just imagine this. You were able to get a personal loan with verifiable income of about $90,000. We can perhaps get you between $40,000 to $120,000 in a combination of installment loans, credit cards, etc. Now you have this money you can use on a monthly repayment. Now I'll communicate with you what I need for documentation and all this. I'm not going to get into that right now. In the process of how it goes through underwriting, how you get a hold of the underwriter, what that conversation is like, and how we can proceed forward, because we do this without friction. We do this to your best interest. We want to know what you need this money for. Personal loans. But over here, what are we looking at? We're looking at a 680, more so a 700 plus Experian score, FICO score. So right there and then, boom. How about the startup loan? Yep, similar. Boom, cross somebody off. Boom, we're done. You cannot qualify for this financing. My world is over. What do? I cannot get a personal loan, a startup loan. Man, Michael, if you just had more options for me, I wish you did, which I do. If you've heard of me before, I have spoken about a lot of them. All right, these don't work. Okay, so I was going to say do a credit line program, credit line hybrid / business credit. That should be at the forefront up here. And if you're not even working on those two, you're not even fixing credit repair, see R there. I know that's a goofy R. It's more of an A now. If you're not even working on those things in the meantime, what are we doing? You're looking for financing, but you don't have these things. I'm going to show you a roadmap. Not everybody shows you all this. And there's a lot more in between these things, like a lot more in between these things. Certain products, equipment financing. You can even go and start off with 401k / IRA financing. So 401k, if you have an IRA, I have my connections there that can help you with that. There are other credit facilities out there you can leverage. You might not want to leverage a HELOC, however you're using it to start a business or for other purposes, because maybe you have family, maybe you have kids. You're trying to protect the house that they're living in. They're not mature enough. They're not at a point where they're getting their own home, or you can supply them with a home equity line of credit. However that ends up working out. Been there, done that. And so you have to come to an agreement with yourself and say, am I doing this correctly? Do I want to leverage a 401k? We don't even know it's in there. A lot of us are like, we just, keep it there, whatever. And when we're going to retire, all right. So we have this money there. Can we leverage a portion of that? How about this? We leverage what we can portion there. And then what we say is, hey, how do I get a personal loan? I got to get my credit here. I got to get these trade lines reporting. And then I can do a bit of the two combination. And then guess what? You use that money and then you're growing your revenue. And then guess what? You could be qualified for a cash advance if you weren't already. You add a cash advance on top of a personal loan. And then you're building up your business credit at the same time. So stop neglecting this. I'm looking for financing. I want an SBA loan. But you don't meet the qualifications. You don't have a lender that's not going to give you an unsecured term loan for business credit and for industry specific reasons. The way you're possibly depositing into your account and those transfer deposits that are unverifiable, that don't look clean and look manipulating to a lender, we don't want to see that. And it's not organically being deposited, not counting as true overall revenue. Maybe it's a factor of your year-to-date financials, your profit and loss, your yearly tax returns. All this stuff I look at, I analyze it. So it's no surprise to me when people tell me one thing and I see a whole completely different other thing. They don't know how to differentiate revenue versus deposits. You tell me you're doing $50,000, but I see you're not. You didn't even deposit this for this month. Or where's this going? I'm trying to keep track of what you're telling me. Do you have other accounts? If a lender asks for those, will you be able to supply them? I have people right now who are stuck in the application because they don't want to do that, or they just forgot about it, or they're just like, it's too much energy and time. Well, the money doesn't make sense to you. You don't even need the money. If you're doing that, it doesn't mean that you actually are in a place where you need the money. Otherwise, what I would be doing is, man, Michael needs this. Hell, I'm going to go over here I'm going to make his life a lot easier. Make my life easier, I'll make yours. Simple as that. You need me to clarify? Okay, this is what it is. This is how it looks like. This is what your situation may be able to be. Boom. Next step. Next part of our communication. We're not backtracking. Our next part is to fill out that link or click that link, go through the application, fintech company, or however I request documentation. That's our next part of our conversation. It's not, I'm crying, I'm confused, and can we revisit? If we revisit something, it's okay. Like, you need more clarity, but we did it like 100 times. That's where I would be like, it's time right now to make a grown-up decision and say, am I going to be stuck? I don't want to listen to this guy. I want to do what I want to do. I just want to go out there and live freely and grow my business and see where it is in 10 years from now. Business credit, credit lines, get access to business credit cards. If I didn't put that there, I've made content on business credit cards. I'll link you to down below. My free business credit building video series, along with more information. We covered the SBA EIDL loan update, more so on the CAF system, and then the no outstanding applications left, what that looks like for borrowers in other states, and what's happening with the COVID, the not being forgiven, the extra things like the deferment, making sure you make those payments on time, being ready for the next year. Get in right now while you can. Don't wait for the winter time to come around. Even if it's not an SBA or prime rates plus 2 to 8%, I would get in as soon as possible and not scramble. And what I mean by that too is get your business credit profile ready. Get your personal credit if you need to get ready. That done. And I have people every single day communicating with me. I got images today from people sending me their credit reports or sending me their credit scores. I can ask for credit reports, soft pulls. I don't always have to ask for them. Might be something we ask for in the process. But like this one right here, I have a great person here who is upfront with me and just shares with me what they're doing on their credit. And I go, great job, keep it up. What I'd like to see though with your Experian credit score is that have this reporting and this. And then when you're ready to get this type of financing, locked in, ready to go, done, that when I get to the point of an offer, I'm not even thinking about it, man. I know that I need this and I'm going to take it and I'm going to run with it. Because whatever the cost of it is, think about this. What money are you making with getting that? Are you taking that money and just saving it for real estate purposes, for mortgages? You want to save money? I get that point. But if you're taking this money and you're trying to grow more money, boom, 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 are you doing it correctly? And what you have to look at isn't necessarily the money. There's a bigger underlying issue. It's your ability to take that money and then understand how it will grow, if any, because you don't have a history of doing it. You see it perhaps in other industries, but you're still questioning and doubting yourself if this is even possible. So for those of you who have more of a repeating pattern in history, to make sure you know how you're going to use this money, it'll go to your advantage, as opposed to somebody who's like, I don't know how this money will be used effectively. I just don't know. I need it for COVID economic relief. Yeah, maybe a line of credit would approve you if so. But even then, you're like, I don't know how I'm going to use this. You don't have a reasonable need for the money in that circumstance. So appreciate you all for watching. Thank you for tuning in. We went way past the time, but this kind of happens, and you get the most value from the content that I'm putting out there for you. I have more emails to get back to, questionnaire forms. I'll be getting back to those of you who have family coming in today, so I'll try to work on a little bit if I'm not distracted. Fridays, Saturdays are my catch-up days, and quite a bit more. So if you're already in the application process, I'll follow up with you. If I haven't yet, it's okay. That doesn't mean I'm not there. It just means we're waiting to hear back from underwriting or a few other details, so then we can follow up with you, my team, myself and a few others, on however that goes. But have all the documentation ready. Have your fundability details ready. When you go to apply, you're not questioning whether you'll get approved or not. And you're just like, well, this person's giving me this loan and that person's giving me that advance. I don't want to cash that advance. Can I get a term loan? And I deal with this every day. Those of you I can say yes to, others that I just can't. And I'll tell you why that is and what you have to do to be prepared. Those of you who just don't listen, and those of you who just keep emailing the same thing over and over that I've already sent you. And I get it. Sometimes we miss emails, but like, what's to give? Come on. And so make sure you look out for my content coming out in the future. I'll be speaking about more things on the market, EIDL, PPP. Oh, employee retention tax credit up to $26,000 per employee. That's a refundable payroll tax credit you can pick up for qualified wages on employees you were able to retain through the COVID epidemic when we were at the height of it, in the beginning of it. We're kind of already past that in a way. So you may be able to qualify up to $26K per employee. That I'll link you to down below. Again, it's a refundable payroll tax credit, and it's by no fault of your own, but what the government had to do, government mandates, shutdowns, then they're the ones that are able to then help you out and then go along in that process with you and help you out. The 0% interest for 6 to 18 months, credit line hybrid, that's a business credit card stacking program. You can use and leverage business credit cards and then be able to pull money out of those for 0% interest for 6 to 18 months, multiple cards. That's the most effective startup program out there, I believe, out of everything. And even non-startups, real estate investors are using this. So look down below, multiple options. You're just not, and even when I show you this, you're just like, I don't know. Well, you're not working on something. You're just there. You're just like, well, it'll take me a month. I needed the money 2 months ago. Well, if you would have worked on this 2 months ago when we first had contact, you wouldn't be in this position now, would you? More or less, maybe you didn't get the full amount you wanted, but wouldn't you be in a position if I were communicating this to you about 3, 4, 5 months ago, and you're still coming back to me 4 months later with the same thing? You haven't changed anything, and I've shown you everything. It's not laughable. It's just like, it's laughable in a way that it's like madness. And so when you know this information, excuse me for that, please run for it and do it. Multiply yourself. Look for different options. Combine them if you need to, if it makes sense for what you can get approved for. And there are multiple products out there. There are more of them. I just showed you a few examples on that whiteboard. That is everything from me. Appreciate you guys for tuning in. Please give it a like if you haven't. Share it with others again that you think will get value out of this, a complete stranger, friend, or family member. And if you have not subscribed, please do so. Click that bell notification icon so you do not miss any future videos I will be coming out with. Appreciate you guys' energy and time for being here today. And if you're watching on the replay as well, appreciate you. Thank you a lot. You don't go unnoticed. I see those of you who are in here, whether you're commenting or not. It's okay. I'm an introvert. It's hard. I get it. But you got to build your skills. You got to understand how to properly put yourself out there and then leverage doing better in your business and what you have to scale back, what you have to move forward with. All right. That's everything from me. Look for all information down below. That questionnaire form is where I would get started. And for all other services there too. Talk to you all soon. Bye.